Welcome to the Midweek Market Update, where I do a technical analysis and give you my thoughts on SPY, the Qs, and IWM. Today I've also got 3 additional trade ideas to share with you towards the end of the video, so definitely stay tuned for that. Let's kick off our S&P analysis as we always do with the sectors here, looking at who was leading, who was losing, and where was the weight. The XLC for communications led the pack today, up around 2%, and the XLY was down at the bottom of the barrel, consumer discretionary here, down 0.6%. As we know, communications are actually fairly heavy in terms of weighting. Google is, of course, in that sector, so no surprise to see it up with the big earnings beat and gap up there. XLY is also fairly heavy in terms of weight and more of a growth-oriented sector, so to see this down at the bottom of the barrel is not overly, inspiring to me, especially given the day that we saw in the marketplace. In terms of our heavier weighted sectors, of course, we have the XLK for the tech sector, the heaviest of them all, up 0.81%. The XLF for the financial sector, still green, up 0.68%, and then the XLV for healthcare, the third heaviest weight, up 1.35%. If we still look at some of the sectors that were leading the pack today, we still get real estate, fairly defensive, utilities just below that, defensive as well. We know the XLV is still defensive, although it's a heavier weighted sector, and so is the XLP for consumer staples. So please don't be fooled that even though we've been seeing some green in the marketplace, the defensive sectors are still sort of leading the pack to the upside. Let's quickly check in on some of these heavier weighted charts and just make sure that risk isn't mounting in one place versus another. And it's been quite a substantial breakout this week out of the 5-day balance that we got from last week. Now, the XLK is coming into a very critical inflection point. You can see that here. It's the big area of equal lows that acted as a flush point leading to that downdraft. And now we're back testing it. With Facebook kind of getting destroyed in the after hours on the earnings announcement, we'll see what unfolds, but I wouldn't be surprised if the XLK gaps down, if the Facebook guidance that should come out during the meeting shortly from now, I believe it's at 4:30 in 10 minutes or so, we'll see, if that is on par with not being so great and Facebook remains on the gap down, I wouldn't be surprised if we get a pullback here in the XLK off of this critical area of what will now act as resistance from prior support. Once again, that number is 164. We've talked about this number for quite some time in our analysis. The other thing I would point out, if I just grab the sketching tool, there we go, is that if I do something like this for a downtrend in the XLK, that first, or well, I guess we would call it the secondary trend line, has technically broken as we moved through it on yesterday and today's activity. So it's just one little nuance. Obviously, we're not out of the woods yet until we can recapture 164, but it's worth at least mentioning. As long as we pull back and generate a higher low, somewhere above 156, maybe, and this is not a guarantee, but on the reattempt, we can start to poke our heads up and over that 164 to sort of recapture more of a neutral to maybe slightly more bullish of an outlook inside of the XLK. But as of right now, there is possibility for this to be yet again just a lower high. So please don't forget that. A lot is kind of riding on this Facebook earnings guidance that we'll be looking forward to in just a couple of minutes here. So that's the XLK in a nutshell. Anything that's back down inside of the 5-day balance, obviously that changes the tone to being much more bearish. This was nothing more than a little bit of a short covering rally. We would expect lower to a rotation to the bottom end of the range here if we fail underneath 156, right? That's the look above and fail. We'll talk about those scenarios as we get into the broader marketplace. So tech sector, definitely one to be watching into the remainder of the week with Facebook earnings. Let's continue along here and talk about financials. XLF, of course, perking up as well, just like the rest of the market. Most notably, we know that this has really been more sideways instead of clearly lower like the XLK that we just had up on the screen. So the fact that we're back up and over this area of contention, remember 39 quarter was such a big deal from in here, is fairly inspiring, right? That's the midpoint of this channel that I just roughly sketched in here. So maybe we make an attempt towards the top end. Again, it's not a guarantee to say we go there, but this is really more neutral and it's not really building an extremely bearish case for our S&P 500. If it does want to pull back, obviously it would be ideal to hold up at 39 quarter. We would love to see a higher low there and then continuation. If we move lower, as long as the pullback holds above the daily 200 SMA and this cluster of lows from right around in here, let's just call it 38 even. And I'm just grabbing this low, this one in here, the open from that day. As long as the pullback respects 38, then I would start to think about that as higher lows and sort of preserve more of the neutral outlook here in the XLF. Things only really get bearish on the breakdown of 37 quarter. Let's talk about the TNX. That's, of course, interest rates on the 10-year, excuse me, geez. While we're talking about financial things, there we go. And you'll notice that it's cooling off sideways. Now, what did I say about interest rates in the past couple of videos? Again, sideways is probably going to be okay for your S&P 500. If it continues to take off to the upside, that will not be a good thing for the S&P 500. And if it moves lower dramatically, that probably also wouldn't be a great thing for the S&P 500, noting that it may start to harm the XLF, and that'll start to provide some more drag, right? So with all of that being said, it's kind of giving us that ideal situation, right? It's found a little bit of a balance, and we're just kind of chopping around, going sideways, accepting these higher rates. Now, to me, as long as that continues, I would expect the XLF to sort of chug along either sideways to slightly higher. And as long as this is sideways here in the rates, then fine. Maybe the XLK gets a higher low pullback, and then we break that area of resistance around the 164 to then make a new high. If this starts taking off to the upside, I wouldn't be as optimistic in the XLK about that breakout up and over 164 after a higher low. That's all I've got for you inside of interest rates. Let's talk about the XLV for the healthcare sector. Zooming in on this chart, again, no sort of surprise, rallying with the rest of the market. We're coming into a critical inflection point. Why is that? It was the low, and it was it looked like a nice little hammer candle there, but it ultimately led to some accelerated selling. So if we can recapture this to the upside, then fantastic. We're looking for the higher low to then do something like that, and then we can make it to these prior resistance points around 137. As of right now, again, it's starting to feel a little bit overextended. I wouldn't be surprised if it's higher low pullback first, then a reattempt, and then we get some sort of break. That'll kind of be the theme as we get into the broad market here. Just noting that many things could potentially use a higher low pullback, and that would be healthy, but obviously the market's going to do whatever it wants to do. These are just the numbers and scenarios that I would prefer if we're going to continue upward in a healthy sort of manner. Anything that really gets back down underneath 129.35, back into that area of balance that we had from last week, that's more concerning. And again, that's sort of the theme of today's video. Anything that happens in here, probably just choppy, but still, it would be price acceptance slightly higher, right? From bubble to bubble, it would be price acceptance higher. We can't ignore that. From an overall range perspective, it would just mean that we're in the midpoint. Direction wouldn't be abundantly clear. I would probably wait for a better indication whether or not we're going higher to retest the top end of the range or lower to retest the bottom. So XLV, sort of in the midpoint. Again, direction not abundantly clear, but we have the levels to be watching out for. Let's talk about volatility, and then we'll talk about the SPY. So there we go. We've got the VIX pulling back hard off of that sort of ceiling up here closer to 40. Now, remember what I discussed in the prior video. The question is, and we're kind of going to explore this question over the end of this week and into next week, is are we going to start finding a floor as we did in the past here at 2050 and not fall all the way back down towards 15? Or will we fall back down towards 15? And that's starting to play out right in front of our very eyes, right? If I go back down to the daily, what you'll notice is, sure, there was a little bit of an uptick here off of that 2050. And of course, with the Facebook sort of earnings conundrum right now and the S&Ps pulling back in the after hours, I wouldn't be surprised if into the end of the week, 2050 holds in volatility and we sort of remain in that elevated state. So it's just something to continue to monitor. As of right now, this is a fairly reassuring move, just noting that volatility is coming back down to earth. It's not like we're still hanging out up here as the market's rallying and there's still potential risk for another, as accelerated drop as what we saw in the prior couple of weeks. So to me, that's volatility in a nutshell. Let's move on over to our S&P daily time frame chart to talk about tradable levels and scenarios into the remainder of the week. The first thing I would point out is that we're sitting right at the primary resistance trend line, right? All-time high, touch number one from the lower high. That's exactly where we went on today's session. The other thing I would point out is that we did recapture that big area right here. We were talking about roughly 450, 450.75 is the number that we've been using. We could round up, call it 451. We did recapture that, right? We are getting price acceptance above that. And if you look at how today, not today's, but this week's action has really unfolded, strong break, right? Out of the area of balance. On pullbacks, we're retracing about 50% into that breakout day. From there, we move forward. We opened on a gap up this morning. We filled the gap, and then we continued on our merry way, right? If sellers were going to be stronger, they wouldn't have stopped at the gap fill, right? It would have moved back down. We would have gotten some more price acceptance inside of the Tuesday range. It just simply wasn't the case. And yes, I get it. In the after hours, all of this was given back. We'll talk about that when we get to the futures charts. But for now, from the S&P cash index perspective, any higher lows that form something like this and reattempt the resistance trend line, I'm personally watching for a break for not only an equal high, but probably the daily 50 SMA. That's the blue line on our charts. And remember, the first touch after a while of not interacting with any moving average is generally the most important touch. If it wants to coincide for 460.25 as a super resistance, that's definitely going to act as a target. And I would look to trim a majority of any day trade positions as we get into it. Now, yes, from a longer term perspective, there's no sense in if you have a 5-year time horizon for your investment, you're not just going to sell it as we get to the 50 SMA. I get it. I'm speaking from a day trade perspective. That's going to act as a target instead of an initiative spot on our charts. So that's what I've got for you in terms of levels to pay attention to. Again, I think things are going to be more clear on a 30-minute time frame. Let me remove this VWAP, which is the pink dot. So removing it. Zooming into the most recent action. So just don't really pretend because this kind of is what it is. There's that balance range that we talked about in the weekly watch list. We did break out of that. Here's the pullback into the afternoon on Monday, held perfectly on the Tuesday pullback. Remember, that's about 50% of that range, consolidated all day. We have a spike to contend with, and that'll become clear on the market profile as well when we get over to that. All of today's price action happened above the spike, an incredibly bullish indication in my estimation. Right here, we didn't really have enough time to determine whether or not those prices were fair. And today, it definitely did confirm that, hey, we actually need to auction higher to see where we can find the next set of sellers. And of course, it was kind of right at that daily resistance trend line. So from an intraday perspective, the moves here have been incredibly healthy. Things are looking good. But as we mentioned, Facebook sort of earnings conundrum is going to be something to contend with tomorrow. I wouldn't be surprised if we get consolidation into the end of the week. Again, things are starting to feel a little bit overextended. We always know that the market can do whatever it wants to do, but if it wants to play nicely, I would love to see something like this and then a break going into the future to sort of maybe reverse this trend in a more definitive way, getting up and over that resistance trend line. Let's take a quick look at our market internals and see what happened this week. So for now, again, serious buying. We always look at that 300 million mark as a benchmark and clearly took it out on Monday, took it out on Tuesday. Today's session, again, you can see more neutral to slightly bearish. It's not like we got to negative 300 million, so I wouldn't read into that too much. If you're watching the breadth ratios all day, they were basically at parity, 1 to 1, 1.2 to 1, nothing really to write home about. Same thing holds true for the advanced decliners, extremely healthy moves on Monday and Tuesday, and then on today's session, just indicating more balance, although there was this move higher, right? Same thing with the ticks. Again, nothing is sort of jumping off the page as like, hey, big red flag, big divergence here. No, everything was playing nicely, quite frankly, under the hood here. And this is what I meant by the Facebook earnings conundrum. You can see that we've retraced a majority of the move, but until we can get back down underneath the spike, so let's talk about this on the market profile software. And by the way, we did just release, or we will be releasing tomorrow, a video on the actual setup for the settings of this particular look and feel, but we do have right now at least a video on what the market profile is. So check that out. Top right hand corner describes what this all is and how you can sort of use it to your advantage when you're trading. So with that all being said, let's talk about the spike, okay? Because the spike is going to dictate, in my estimation, whether or not we remain in bull mode and we're looking for the break of the daily resistance trend line, or we reevaluate and probably look for more sideways acceptance before breaking the resistance trend line. So as long as we remain above the spike, which that level is going to be around 45.20, we'll call it, just for round number's sake. As long as we're above that, bulls are still in control, right? We're searching for these higher prices. We have two-sided acceptance back and forth. Eventually, the next leg will come after some period of balance, either up and over the highs or down and out underneath the lows. If it's going to be down and out underneath the lows, it has to be below the base of the spike, which we just pointed out is roughly 45.20, okay? That's what I'm watching out for in the ES based on our futures and market profile. You can see that on Monday, it was really more of a short covering rally. We would classify this as a P-shaped profile with the A period being very emotional. All of the value is up towards the high of day there. The point of control was towards the high of day. On the sort of session from Tuesday, you'll notice that the value was middling, and the spike, again, that's why we don't really have enough information. We couldn't tell if value was going to be fair here, but look at where value is today, right? It's certainly inside of that spike range. The fact that it did migrate higher here is confirming to me at least that the buyers are in control. We do have a poor high and a poor low on today's session. You can see that we only have one tick of excess here and one tick of excess there. Traditionally, we would like more than that. At least two qualifies it as good excess, and right now we currently don't have that, but just look at how balanced the profile is here. I would just watch for exactly that, quite frankly, some more balance in this area and use the spike as your line in the sand. Let's get back on over to the platform here. and talk about the remainder of our broad market, going on over to the QQQ. What you'll notice here is very similar to the XLK. We are not, we talked about the SPY being above its sort of breakdown point 450s. We are not there in the QQQ. However, we have broken the secondary resistance trend line. We did break that on today's session. With Facebook gapping down, you can see the QQQs are currently trading around 360, let's call it 362. We're in the 90s of 361. That's substantially lower than the close, right? So 361 brings us back to here, roughly. I'm just sort of eyeballing on the chart, which is a gap down, right, underneath today's range. It is still, however, above the top end of the 5-day balance from in there. So in the Qs, instead of using the spike like in the S&P, I would just start to use that as your threshold of bull or bear, right? If we're above the 5-day balance, bullish, right? We're just simply maybe getting a break and retest. That would look something like this: break, retest, higher low, as long as it happens above the top end of the range at the 354 level, we'll call it for round number's sake. Fine, things check out as being bullish. We would look for an equal high and potentially continuation into the future. Now, one step at a time, right? We have to see if that ultimately does unfold, but that would be the bullish scenario. If we fall back down into the balance, we have a look above and fail. Target would be the bottom end of the range here, if not lower, Monday's low from last week at 334 quarter. That's what I'm seeing on the daily time frame. Let me quickly show you these intraday levels here on the 30-minute. If I just zoom in a little bit, again, the movement on an intraday basis has been extremely healthy. Nice break out of the range. A little pullback on Monday, essentially identical to the S&P, right? The pullback on Tuesday, respecting that same low as Monday, breaking out into the afternoon. All of today's session was spent above that level. So to me, filling the gap, repairing that structure, respecting these levels, the bulls do look to be in control. Again, the sort of wrench in the mix right now is definitely going to be Facebook earnings. Let's continue along here and talk about the IWM. Let me go back out to a daily time frame chart. This one is trying to perk up, but notice that it is still inside of its area of balance here. Small caps sort of acting as that indicator for risk on, risk off. This unfortunately is not nearly as bullish as the other charts we've looked at so far, just kind of sitting at the top end of the range. There's still a chance here that we just play ping pong and make a move lower, right? We always know whenever we're in a range, your edge exists at the edges, at the top and at the bottom, mean reversion or a breakout. As of right now, the lower wicks might suggest that there's something that could unfold to the upside, but we'll take it one step at a time, and then recapturing 208 really starts to cement the turnaround in small caps that, hey, we're back inside of that, year-long balance. Let me go out to the 2-year, weekly. There you go, right? Recapturing 208, that definitely starts to make things feel a little bit more comfortable to the upside, but there's still possibility, right? There's so many scenarios to be thinking about as these trends are potentially changing. There's still possibility for this, right? Turnaround at the back test of 208 for a weekly lower high, something that preserves this little downtrend right here, and then, it's still risk off in IWM. So one step at a time. The primary thing to be watching out for here in small caps is definitely the top end of the range and whether or not it breaks out and we can get to 208 in the first place, or we rotate back down to the bottom end closer to 190, 170. Let's talk about Facebook briefly with the earnings going on after hours, and then we'll get into those 3 trade ideas. This was not a part of my count here, so I've still got 3 extra things for us to look at. But what you'll notice is just, again, massive fall to the downside. I'm not sure if this is a true upper wick. Sometimes Thinkorswim likes to throw some weird price action on the charts. Let's go ahead and pop on a clean drawing set. What I want to do with you guys is talk about scenarios to potentially trade this into tomorrow's open. We want to know where the overnight low is. We want to know where the forecasted opening print is, and we want to know where today's low of day was. We're going to turn the extended hours back off, and we're going to go out to a daily here. And we're just going to look to see kind of where we're at. So whenever we're dealing with a gap, could be up or down, we have a gap rules framework to employ. If we open here, the first thing we want to look for is not a look below and fail, a gap and trap rather. So this is always scenario number 1. If we open here, fail to take out the overnight low, basically new sellers will not step up underneath that level, look for longs back up through the opening print to start to fill the gap. Now, because we have this big cluster of lows here, and it's roughly a 50% gap fill, that's definitely going to act as the first target before you fill the gap all the way up towards 317. Because of the magnitude of this range, you're traditionally going to get 2 big forces working against each other. You have anyone who was long from up in this area of the chart saying, wow, we just got smoked on earnings, it's time to sell, and then reevaluate in the future. So you have a lot of selling pressure here. And then you have the flip side of this coin. You get people who step in and say, wow, Facebook just gapped down, I don't know how many points is this, over 60 points. It's on sale, right? I need to buy this. So you get big buying pressure as well. Those two things kind of cancel each other out. I wouldn't be surprised to see Facebook kind of go sideways, almost like what we've seen in Netflix, right? As that originally started gapping down on its massive earnings conundrum. So that's how I would think about Facebook. If it's going to be continuation for the downside, it's got to be a bearish pattern off the open. So either a bear pennant, descending triangle, basically anything that sets up a breakdown of the overnight low should start to move us lower, in our next daily area of support beneath us. It's not going to come from there. Let's go ahead and get some more time on our charts here. We're on a weekly right now, by the way, and we're looking for support from structure underneath. I would start looking at 230 roughly, and then after that, you can see there's kind of some room to fall here towards 213. Now, I'm not saying we get there all in one day, right? That would be sort of unreasonable, but it definitely is just the next major structural areas to start to pay attention to in Facebook. So with all of that being said, let's get into some of these ideas. First one is on RBLX. There we go. And this is Roblox. I'm going to go back down to a daily time frame chart, and what I want to point out about this one, I'm actually going to clear it up. We have too many lines on the chart, is that basically we have an inverted head and shoulders. And this is not a guarantee to say that it reverses up to the moon, but there could be something here if we take out this little neckline. We have 2 days of balance back and forth. Oops, missing my delete tool. There we go. 2 days of balance back and forth on the Tuesday and Wednesday session. If we can take out the 2-day range highs and the neckline here at 69.38, call it 70 even, look left, there's not a ton of resistance until we come up closer to roughly 79. Now, I'm not saying we get there all in one day. Could it do that? Yeah, if you look at some of these ranges from in the past, it certainly could be on the table, but I'm just sort of illustrating, right, that there's some room to move overhead. I would be looking for bullish trades up and over 70 inside of Roblox. Not so interested in the trade if we take out the 2-day balance lows here closer to 63.40. If that happens, sure, this might be continuation of the trend to the downside here, but based on this pattern, I would like to see a break of the neckline for higher. So that's the first one. Next one is on SBUX, so another one with an X in there. And this is Starbucks. They did report earnings, I believe it was last night, and you can see, I'm going to clear this drawing set as well. You can see that we remained in this flag, right? So if I do something like this, this is technically a massive bear flag. So for those of you who do not get your Starbucks every morning at $6.99 for a latte or whatever, then you might be saying, wow, I hate those people looking to go short. You're probably waiting for the breakdown of 94.58. For those of you who do get your Starbucks latte, extra grande, mocha cappuccino, whatever, then look at this breakout point. To me, all of this pressure is building underneath 98.62. If we can firmly get a candle close above, look left here. This breakdown pretty much lacks structure in entirety. I would say maybe there's a level to pay attention to in here closer to 104, but after that, it's kind of this area here at 107. I mean, you just get the gist that there's some room to run. If you think about range doubling rules as well, it gets us most of the way there to that prior structure, and with the lack of structure in these two candles specifically, maybe we just make it all the way towards that 103.79. So that's the second trade idea inside of Starbucks. Whenever you have a range like this, it just offers a plethora of trade ideas. You get the breakout and go, double the range. You get the look above and fail, targets the bottom end of the range. You get the rotation from the top to the bottom, breakdown. I mean, a number of possibilities here. So Starbucks definitely one to be watching. For me, I'm sort of a little bit more biased if the marketplace wants to continue to rotate higher. Looking for the breakout here. Nice volume coming in as well, indicating some accumulation down here in Starbucks. Last but not least, we have LVS for Las Vegas Sands, and this is another range sort of trade. Just like in Starbucks, the same sort of theories are going to apply. There's your range, but in this one, what you'll notice is we have an inverted hammer, and it's also off of the daily 200 SMA. Because this is also not typically seen as like, it's not big tech, right? It's not always bullish, and obviously with the sickness going around, it will be sensitive to headlines. Keep that in mind. But the inverted hammer at the top end of the range, after failing to really break out, you'll notice that we did take out the top end, made a new high today, and closed back down underneath. It's a micro look above and fail, right? What's the target? Well, the bottom end down here, and underneath that, there's a massive gap. That's another part of this trade setup that does make this fairly attractive, is this gap down underneath. So even if you don't want to get in now for the rotation to the bottom here at 41.56, maybe it's on your radar as a double top here. There's your neckline, right? So you get this double top, take out the neckline, fill the gap down below. 39.42 is that next level. Obviously, you're going to stay away from this one if we start getting more price acceptance above 45.30. If you are looking to go short aggressively, stop just goes over today's high of day. That's ultimately going to wrap up today's video. If you enjoyed it or learned anything new, let me know in the comment section or by giving the video a thumbs up. Don't forget our main channel is linked in the description. Secondary channel, I do that every single time. One of these days I will catch myself, but that is truly going to wrap it up. So I wish you all a green trading week.